India VIX dropped almost 18%. This was the sharpest single day drop since since May 2019. Now the volatility index has now fallen to its lowest levels in the past 9 months. And with Nifty nearing its resistance zone, the big one, 22,500 odd levels, VIX cooling off towards 10 or potentially lower may not be a good sign for the near term. This is because a drop in volatility when the markets are near resistance level could suggest that a correction may be in the offing. In theory, it could also indicate a potential breakout on the upside. But either way, a big move could be in the offing, and look at it as a calm before the storm. Of course, the big question will be which way will the tide flow. For that, I think 22,500 odd levels is the key again, because remember, this was a zone where we had reverse course multiple times in the past, and once it was captured and captured with conviction, the markets went on to surge another 250 odd points from there on to the previous record high, which again was 22,775. But looking at the overall texture of the markets now, in conjunction with a strong recovery, the bias certainly is on the upside. But let's not forget that we have enough and more reasons to worry about in the next 2 months, both on domestic as well as the global front. Among global headwinds, the biggest one, of course, to track will be what happens next in the Israel-Iran conflict. So far, no news of escalation is being looked at as news of de-escalation. But since the situation still over there, remains uncertain, it's very prudent that we keep a track of that. Also, the bond yields in the US, the inflation trajectory, especially considering the recent surge in crude oil prices, that could have negative implications for the emerging markets like India. But apart from the global headwinds, back home, the focus will of course be on individual stocks, as we are in the midst of the fourth quarter earnings season. Also, polling for the general elections have also begun, so expect volatility over the next couple of months. Then there is the full budget that will come out in July, and the markets are also keeping an eye out on the monsoon trajectory. So all these factors will is more than likely to keep the market on the edge in the near term. But joining us in the studio now is Mr. Kranthi Bathini of Wealth Mill Securities. Sir, thank you for giving us time here on News 9. And I want to begin by asking about this big, massive 19% drop we saw in India VIX. How are you reading this?
Yes, as you perfectly explained about the VIX and its implications. What we can sense is some kind of, at the higher end of the market, what we can sense is traders are not initiating long positions. They are unwinding their positions, and everybody are in a wait and watch mode at this point of time. So that's the primary reason for the VIX to coming to the range of 10. That's what creating is. At the higher end, in the large caps, people are not initiating both in the derivative market as well as in the cash market also. They're not going initiating the positions. But by and large, right now the action is more in mid and small cap, and there is a stock specific action what we are seeing. Of course, you rightly mentioned that these are the resistance zones going ahead. Market looks on the higher end of the market. Market looks adjusted. And also, it's not able to get any kind of strong positive triggers at this point of time. That's what the key cause of worry at this point of time.